Joining me now, Kingsview Wealth Management CIO, Fox Business contributor Scott Martin, Benchmark Investments managing partner Kevin Kelly, and senior wealth manager at Payne Capital Group, a group I am not affiliated with, Courtney Dominguez. Scott, I want to start with you. So what do you make of the fact that there are more losers than winners this week? The breadth has been absolutely, it's been ugly, right? Is this part of market consolidation of all these gains?
Yeah, a maturation of the gains, Charles, and just kind of the market faces. But I don't think it's a bad thing, really. I mean, when you look at the fact that, as you mentioned, so many have been reluctant to chase the tech stocks at such high valuation, it's good to see them to come back because it might entice new dollars, but also new dollars, Charles, that start to go into other areas of the market. Think about travel, think about restaurants, think about banks, as we've been doing over the last couple months, as you know. So tech pulling back here obviously gives you an opportunity to enter tech again. We already own tech, so we're not adding to it here, but looking to pick up some stuff on lower valuations.
Kevin, I know you also have been very bullish. So what are your thoughts now? Again, another up week for the market, although there will be more losers than winners.
Yeah, I think what you're seeing is a tech acceleration happening in our economy due to the pandemic. So it pulled forward actually where we were going to go, and that's the digitization of our lifestyles. And that even plays into your stock of the day, right? Deere is an Internet of Things device company because they're putting sensors and software on their machinery, right? And so the management team has adapted to the new 21st century of e-commerce and industrialization. And so, what I like is other tech companies that aren't making really big moves, but still have a lot of catalysts in front of them. So you can look at an Akamai. It's actually up on the day. They're a content delivery network because we know with NVIDIA's earnings yesterday, we saw that data centers are crucial to our lives. They sold more data center chips in that segment than they did in the gaming, and they're a gaming chip company. So that tells you everything you need to know about the digitalization of our lifestyles.
Right. I love how you connected those dots. Courtney, I've liked your optimism, by the way, as well in recent shows, and you were already kind of looking beyond technology. What do you like here? What else is out there with potential opportunity to the upside?
Yeah, I mean, I think at some point you really got to look beyond technology as it gets more and more expensive. And we've been talking in the last several weeks about looking more at value rather than your growth companies. If you just look at it historically, your value tends to outperform growth by about 4.5% a year. And we're just coming off a decade where growth is significantly outperformed. So I think we are kind of due for a rotation there. But you are really starting to see that valuation line up. And just to get kind of more granular in there, we're really looking at your small value companies rather than your large. So you're really starting to see your small caps are picking up earnings a lot faster than your large caps are. And just those valuation discrepancies are getting so wide right now. There's so much opportunity still in your small cap values. And that's really where I'm looking to add any new money right now.
Kevin, thinking about what you just said with Deere and how they've adapted, I think new traders, and we get a lot of new traders who watch this show, probably think, 150-year-old company, they're boring, but there's a reason you stay public for 150 years. I want to talk about maybe some other old school names that you may be looking at or spying.
Yeah, well, all you need to do is open up the Wall Street Journal every day, and you'll see these old bellwethers, like even Honeywell, which is now getting into quantum computing. And Honeywell is a big aerospace company, but they understand that we've got to digitalize everything that we do in every single supply chain. And so they've done very well in that regard. And that's why you've seen Honeywell's share price outperform GE, every single year for the last 15 years, because they've been part of this, right? But you wouldn't think of them as a tech company, but they're investing in quantum computing.
Scott, one area, I know you like CAT, I know you like Deere, and travel, all I think intriguing. You also like financials. I mean, the financials are just stinking to join up. What the heck is going on, and when do they turn around?
Well, look, I mean, that's something viewers tell me over email is that they've been stinking up. They've been okay. I mean, they haven't been as great as tech. I mean, don't get me wrong. But hey, Charles and everyone, like, some of our great, let's say one of our great musical philosophers, I guess, once say, if you can call them that, don't call it a comeback. I've been here for years. As far as JP Morgan and some of these others, like you mentioned with Deere and Cat, Charles. So these are tried and true companies along that same theme, trading at really good valuations, by the way, versus the market. I mean, we own JP Morgan, we own Citi. These are trading in the teens as far as PE ratios. They've set aside all that money for loan loss provisions. They're well capitalized. The markets are going to get better for the banks. So therefore, that's why we own them and why we're continuing to pick them up here on down days.
All right, and we'll see them at some point. One of these earnings seasons, they're going to do well. But for now, it's Foot Locker that had the great earnings report, among others. And you know what caught my eye, though, wasn't necessarily the earnings, but management reinstating dividends. You know, there have been several names that have brought back their dividends, and I personally think it's a great sign of confidence, Scott. We've got someone on the screen here. One, by the way, another one I like is Estee Lauder. I actually sold it a couple days ago. They reported. I thought I was a genius. The stock got hammered. 2 upgrades today, reinstating the dividend. Do you look at anything like that when you're making your decisions?
Yeah, I mean, dividends are a gold mine right now, to use a pun, because we do like gold still, too. Just given, Charles, the fact that 10-year, I mean, there's no yield really to be found anywhere. I mean, even if you look at high-yield bonds, as far as that space these days, there's not much to be found there, given the risk that are kind of out there, even though the Fed's in that game now, too. So if you're looking at dividends on Coca-Cola and some of these other companies as well, those are pretty attractive longer term when you consider that, in our opinion, at Kingsview, rates aren't going anywhere for many years with Powell and company involved, and therefore dividends on the S&P 5 with the total return capability look pretty good.
And Kevin, what I also like is like when management says we're going to do a dividend, they have to pay this money out. Unlike a buyback, which is we may or may not be able to pull it off. To me, it's the ultimate sign of confidence. Any of these dividend ideas, particularly maybe companies that have brought it back, that are on your screen?
Yeah, so we actually do look at some of these companies that pay out significant dividends, and they have to because they're classified as real estate investment trusts, but they're at the front lines of the digitization that we talked about, and that's like an Equinix, right, or a Crown Castle. If you think about a tower company that AT&T, Verizon, Sprint, T-Mobile, Dish have to put new 5G antennas on, this company yields over 3%, and their management wants to increase their dividend every single year going forward, 8 to 10%. So if you use your cell phone, pay yourself by buying companies like that.
Yeah, CCI, I think, is going to be a monster, particularly as we really do roll out 5G. Speaking of rolling things out, I think there's good news on America reopening. We're going to give it another shot as a nation, right? I just read this morning, indoor dining in Philadelphia soon, high school sports back in New Jersey. COVID-19 cases are coming down, and there's serious vaccine hopes. Courtney, how does this inform your portfolio? Let's just say, we come back, we're a little bit smarter, we party a little less, we social distance, we get a vaccine approved in November. What changes are you making ahead of something like that?
Yeah, I think it really comes down to just staying invested. And I think just kind of to echo all of these thoughts that we've had today, there is still a lot of value to be had in the markets. There's certain things that are getting very expensive right now, but there's so much cash on the sidelines. And I would just really urge everyone, don't wait for some sort of drop to happen. I think there's a lot of optimism. We're seeing things kind of open, and vaccine or not, things are getting back to normal. There's still a lot of places in the economy that haven't hit their highs and are still great buying opportunities, specifically a lot of those value and dividend paying stocks that we've highlighted today.
And you also say that vaccine or not, we're going to learn how to reopen better, and that means it's going to be better for the economy either way.
I think we're already kind of seeing that. I don't know if you've noticed that, but just day to day, things are starting to feel a little bit more back to normal. Definitely not there, but vaccine or not, I think we'll get there. But hopefully vaccine.
Absolutely. Courtney, Kevin, Scott, didn't get a chance to talk to you about gold, but you mentioned you're still long. People wanted to know that, too. They said, make sure Scott's still long gold. He is. All right. Thank you all very much. Have a great weekend. Meanwhile, the post office